Joining me now with more is Jeffrey Roach. He's the chief economist at LPL Financial. Jeffrey, welcome to the show, and let's dive right in here. A market that is trying to claw its way back to new highs. Where do we stand on the economic front?
Well, we're in a bit of a fog, I think. Certainly no surprise that the economy is indeed slowing from its breakneck speeds of 2024. But it's been a little bit confusing because, of course, after a slow January start and February, March really was a little bit of a reversal, but it was really all about anticipating tariff policy, the trade policy of the administration, not necessarily a reversal in the overall trend of the economy. So I think we're in a policy fog. Markets are certainly looking for clarity. Unfortunately, we know that a favorite word, a lovely word of the president is tariffs. It should be clarity. I think that's one of my favorite words right now.
And we have heard, of course, from the president's cabinet, including Treasury Secretary Scott Bessent, that strategic uncertainty is part of their game theory at play here. That's a term that is circulating on the floor of the New York Stock Exchange as well. It's something we've heard now for weeks the administration use. What does that mean, the fact that they're operating on strategic uncertainty?
Well, I think it's very fair to say uncertainty is uncomfortable. So I think markets would rephrase that, not necessarily strategic, but certainly uncomfortable uncertainty. Now, granted, I think we got a little bit a step in the right direction with the recent conversations with the UK. Unfortunately, this is a small step, not only in the fact that our relationship with the UK is much smaller in terms of imports and exports than other countries, but it's also not necessarily full of a comprehensive detail about what this might look like. But overall, though, this is maybe a small step in the right direction.
Okay. Can you quantify the impact that the tariffs have on the economy and the consumer based on what we know right now?
Well, it's pretty small. When you look at the numbers, the fact that the U.S. imports just a bit from the UK in terms of percentages. So, for example, the imports that come from the UK make up roughly 3% of all of the imports that we bring in. If you flip the other side of the equation, what we export to the UK only makes up about 4.5% of what we export globally. So these are very, very small numbers. It's a step in the right direction, as I said, but certainly a pretty small step.
What is, though, the economic impact over time that you anticipate these tariffs to have? Of course, we've heard a lot of uncertainty out there, including, as I referenced earlier, from the administration itself. But it does look like there is a coalescing consensus, if you will, that probably in the back half of the year is when we could start to see an economic slowdown and a tick higher in prices due to changes in trade policy.
Well, we've downgraded our forecast for growth this year. I think we still could grow about 1%, but that's after we move past some of the uncertainties of this near term, maybe Q2, Q3. So 1% growth. Now, granted, that's base case, and the base case includes the fact that we get some deals worked out with China. Now, there certainly is risk that 1% growth is not even sustainable if we don't get a resolution. So really, investors are highly anticipating some success in the weekend meetings that the Secretary of Treasury has with Chinese officials in Switzerland this weekend.
What do you think that growth projection means for the equity market?
Well, markets have certainly recovered from the April 2nd debacle, and that's certainly something that I think in terms of how equities are trading, I think equities are not trading with a recession in a likely scenario. I think in our case, we do think about a 45% chance of recession. Again, that does include some resolution with some of our larger trading partners, not only China, but we really need to see some details come out with South Korea, with Germany, India, those nations as well.
Mm-hmm. It's interesting here because Fed policy has been keenly in focus, Jeffrey, in terms of what the central bank's next move will be. With this data in tow, how does that impact rate cuts and or potentially pauses going forward?
I think the longer we see uncertainty, and maybe we want to say strategic, but uncomfortable uncertainty in the near term, it's probably likely for us to anticipate that the Fed does not do anything in the June meeting. I thought earlier this year that June might have been the first meeting where they cut by 25 basis points. That's probably going to be pushed out if we don't see some more resolution with some of our larger trading partners.
What are the key data points that you're following?
Well, of course, it's really helpful to keep looking at those weekly unemployment insurance claims. We have seen a little bit of an uptick in continuing claims, those that are continue to collect unemployment insurance benefits. That is going to be key. Labor market is certainly key because we need to see a stable labor market in order to keep the consumer on stable footing. The other thing that I'm looking at that's very important is how small businesses handle this uncertainty. Clearly, there's greater risk on small businesses, but we also know that small businesses are the drivers of job creation in this country. That's a very, very important sector to watch.
All right, Jeffrey Roach, Chief Economist at LPL Financial. Jeffrey, thank you so much for joining.
Thank you.